I see a lot of traders and analysts still stuck in the bear market thesis for stocks or for the stock market. And I tried to warn people months and months ago when the Dow and the transports both confirmed a higher high, producing a Dow theory buy signal, that stocks weren't in a cyclical bear market anymore, and you had to adjust your trading strategies. But I see people continuing to try and pick tops and short the stock market. And at this point, it's pretty clear what's going on. This lower panel here is the regional banking index. You can see back here in March, this is where several of those smaller regional banks went under, had to be taken over by some of the large banks, and where the financial system was in jeopardy of collapse. And I think that was the part at which, or that was the time at which QT ended, the Fed panicked, and there's no doubt in my mind that the Fed is now pumping maybe massive amounts of QE into the market. They're trying to keep this financial or the banking system here from collapsing. They haven't fixed the problem, but they have at least temporarily stopped the collapse. But you can see where all of this liquidity is going. So some of it is going into the banking sector here and has stopped this collapse, but not a lot. Most of it has gone into the tech sector. And if you look at this long-term chart here, you can see a huge character change in the stock market in general and the tech sector in particular. Right here, right as this collapse got started, all of a sudden the tech sector took off like a scalded cat. Pretty clear sign that the Fed is doing QE again, and that a lot of that is flowing into tech. Now, we've got a 4-year cycle low coming due sometime next year, so I suspect what's going to happen is tech is going to get a little overvalued, and then liquidity is going to start to leak out of the stock market and look for an area or a sector that is undervalued and has better prospects. And let me change this lower panel. I'm going to show you where I think it's going to the liquidity is going to start to go. All right, so this lower panel now is a chart of the CRB. The CRB completed its bear market, secular bear market back here in 2020, slightly after the stock market bottomed, and it started a new secular bull market. This was the first leg up in that bull market. This was the advancing phase of this 3-year cycle. It went well above the high of the previous 3-year cycle, which indicated that commodities were now in a long-term bull market. They have been, as the Fed started raising rates, trying to fight inflation, the CRB started moving down into its 3-year cycle low. I think there's a decent chance that maybe the CRB completed that 3-year cycle low right here with this kind of a double bottom back in the first part of June. I may be wrong on that. There may be one more dip down. The stock market's going to be due for a daily cycle low here at some point. It could be severe. It's also going to be due for an ICL later, maybe early fall. That might drag the CRB down one more time as well. But I think at some point here, the liquidity that is now that the Fed is producing and is now flowing into the tech, mostly into the tech sector, but into the stock market in general, I think that's probably going to start leaking into the CRB, and we're going to complete this 3-year cycle low, and then we're going to start the advancing phase of another 3-year cycle in the CRB, and I do expect it's going to make a higher high above this peak here. I'm just not sure yet whether or not we have completed the final 3-year cycle low with a double bottom here. This did come up a little bit short of the 38% Fibonacci retracement. I think it's down here around 2040 or 240. So it may be that when stocks give us the next ICL correction, that maybe the CRB gets dragged down as well and makes a lower low, maybe comes down to around this 240 level and gives us a final 3-year cycle low, and then we start the advancing phase in earnest. Hard to say at this point, but it's clear that it is working its way down into a 3-year cycle low. It has been pretty mild so far, mostly a sideways churn, and I think a lot of that is probably because the Fed is pumping a lot of QE, and some of that is already leaking into the commodity markets and not allowing the commodity markets to produce a severe correction into that 3-year cycle low. Now let me change this chart one more time. So I think gold is going to be the key. Clearly the banking cartel, the Fed, are trying to suppress the gold market. They're printing lots of liquidity. They would prefer that it stay in the stock market, not leak into the commodity markets. That's just going to be next to impossible to achieve if gold is breaking out to new highs. The rest of the commodity markets are going to take their cue from gold, and they're going to start the advancing phase of the next 3-year cycle in earnest. And so there has just been countless attacks on gold. You can see, we had a rally here, and the cartel attacked hard at 2,000 to keep this suppressed below 2,000, even though the dollar is moving down into a daily cycle low. I'm not convinced yet that we put in a bottom. There's a small chance that maybe the slight undercut this past week did complete the intermediate cycle low in gold. I'm going to emphasize the word small chance again. I think we've got to have a more recognizable C wave down, something that maybe comes down to test this 1900 level, and then we'll get our bottom. Our next intermediate cycle, I think, is going to break out. It's going to, the manipulation of the gold market's going to break. The banking cartel is going to get annihilated, and I think when gold finally breaks out above this 2100 level, and the banking cartel can't stop that move anymore, then you're going to start to see more and more liquidity leaking out of stocks and flowing into the commodity markets, and the CRB is going to start the advancing phase of its next 3-year cycle in earnest. So right now the cartel is managing to keep gold suppressed. It probably has not finished its intermediate cycle decline just yet, but once it does, then it's going to start the advancing phase of a new intermediate cycle, and I do not think the banking cartel and the Fed will be able to stop that advance. I don't think they're going to be able to stop it from breaking out above 2100, and when it does, the rest of the commodity markets are going to take their cue from gold, and all of this liquidity that the Fed's pumping in trying to prevent the collapse of the financial market is more and more of that is going to start to leak into the commodity markets, and I think the stock market's probably going to stagnate, and the CRB is going to take off in earnest to the upside, and I think the big trending move, of course, I think is going to be in the metals, and once we get a breakout above 2100, it's game on. Cartel manipulation suppression is done, and I'm on record saying $5,000 gold is going to be a piece of cake, and 10,000 is probably, I would say, has a decent shot of being hit during the advancing phase of this next 8-year cycle. So until we get our final, until I'm convinced that we've got our final intermediate cycle low, I'll still leave the SMT Premium newsletter open for anybody that wants to subscribe. once I think the bottom has been printed and we're in the advancing phase of a new intermediate cycle, the cycle that I think is going to break out above this 2100, then I'm going to close the SMT to new subscribers. I want to try and prevent people from buying and joining the SMT at these tops right before the market corrects. I want to get people to buy low and sell high instead of what most people do. They buy high and then they get knocked out during corrections.